Welcome to another episode of TRVC, the Turkish Venture Capital Podcast. I'm Yunus Çelebiler. Our guest today is Cem Baytok. Cem is a founder as well as a GP of IDA Capital. Very excited to have Cem. We had the opportunity to just chat a little bit now before the episode, and super interesting story. So I wanted to start off with that. Maybe Cem, if you could tell us a little bit about your path to starting a venture firm and what brought you here. How did you get there?
You want a long story or short story?
Well, it's a great story. So, I mean, long is fine.
The shorter version, it's been almost more than 3 decades in my professional life. First 15 years were kind of founder and entrepreneur. And I had been through all those challenges what a founder would be facing in a burgeoning economy, country in Turkey, where no venture capital existing, access to finance problem was affecting us at the greatest extent. And then I had a chance to join to a private equity team, to work with them for several years. We made very successful investments in Turkey. Through that process, I realized that venture capital as an asset class is a necessity in Turkey and also in other emerging markets, because just the banks cannot finance the entrepreneurship, and the high growth businesses requires different set of capital, which is venture capital. That was the reason why we started venture capital. It was kind of early 2010s. Then we, along with my business partner, Anil, we formed IDA Capital. And for years, we've been through the process of developing our own traction and gaining our own knowledge and excelling our strategy, made several warehouse investments, made our own investments, and years passed. And luckily, all of them were good. Not fast, but good. Just before 2020, before COVID, we also decided to turn into entrepreneurship again, and we became founders again. We were in between funds period, perhaps thanks to COVID. And it took another 2.5 years for us to raise our own capital and grow our business, mostly through bootstrapping. And now we own and manage a very successful fintech company.
And this is Work Company?
Yes, it is Work Company. Work Company starting to be a global player as well. I'm right now in London, UK. Work Company UK is growing as well. And its financial figures is spectacular. I mean, in addition to being a founder, I'm also a VC. That's why I see the KPIs and I see where it is going. That's why I'm very happy. But after that first 2.5 years, again, thanks to being VC, we knew how hard growing a company was. And then we were lucky and we invited a third founder partner into our business. And now he is leading Work Company as CEO. And then we had a chance go back to venture capital again, and we raised our latest fund back in 2022. We invested primarily into fintech and e-commerce service businesses in Turkey.
This fund that you raised in 2022, it's a Turkish fund, so under the Turkish GSYF regulatory framework.
Yeah, a Turkey domiciled fund, but a typical venture capital fund. 2.5 years investment period. We kept the investment period short because we knew that the fund was going to be so successful.
So it's already fully deployed?
Yeah, and we wanted to raise more. That's why we didn't want to wait for many years. We deployed about $15 million in the last 2.5 years, and our TVPI is slightly above 3x right now, which is in 2.5 years, which is a very good performance. And another indicator also, although we have a few home runners, all of the portfolio companies are doing great. No failures, and they won't be probably. I mean, the outlook is that.
And it's mostly fintech, is that right?
Primarily fintech, but we have been also the first impact investor in Turkey, so that we also, in addition to fintech, ran an impact investment strategy. So our portfolio also covers other financially sound, impactful businesses as well. We have one investment in health, one investment in education, technology, one investment in climate, energy efficiency. I mean, they're all doing well, but fintech is our core focus. those are the verticals that we see. There is a lot of potential for growth in emerging markets. Turkey is a good example for that, and we've done that in our work company as well. That's a proof.
And your angel investments. And so it took a little while to get there, and you went back to starting a company before finally closing a fund. What sealed it in the end, do you think? Was it a new class of people who were suddenly entering the asset class, or was it because your track record that you had some companies that had starting to do well that attracted money to your fund?
First of all, resilience, because any party who's resilient and who has a sound business, sound strategy, if can persist or do not perish, the likelihood of success is high. That's it. We did not perish. We persisted. We insisted on what we knew what was right, and all the other things came alongside with that. I mean, traction, market appreciation, knowledge, brand awareness, leadership. All of the other things are required other parameters. But one other critical factor was that was perhaps a tectonic shift in our success. We were following what industry was telling us. Go through that direction, create that kind of a pitch deck, go to LPs, I mean, fund investors, and tell what they want to hear, international ones especially. But we then realized, why don't we follow the methodology that we're telling to the startup founders? First, listen to your customer. Our customers are our investors. So then we started to listen our customers' demand, and then we created products that can suit to their investment appetite.
So
That is the key.
what were the customers telling you?
Local market was interesting. In our current fund, more than 90% of our investors are institutional pension funds.
Okay.
So the pension funds
Turkish retirement funds.
Yeah, Turkish retirement funds. So their investment appetite and also their investment mandate was somewhat different than the typical international VCMP structures. They were looking for daily price declarations because they were open-ended funds, and then they had their own regulations, and also they were new into the market. They were not able to take long-term investment commitments. It was the story of 2020s. Right now they learned, and then they gained experience, and they know. But that's the reason why we kept our investment period short. And also we had several warehouse investments, and we rolled those into our fund and then showed all the other investors that, hey, we already have those companies, so that it's not kind of a semi-blind pool investment. We're going to be doing follow-on investments into those. Plus, we'll be doing similar investments like these. So if you like these deals, that is the proof of how we are going to be going forward. So that unlocked many doors. So as more than 95% of our investors are local. So attracting local capital is very hard, and we did it. Now we are switching our
Not
strategy.
that attracting foreign capital is super easy, but
At least the foreign capital,
the
when
sizes are bigger, maybe.
capital wants to go into a vertical or a geography or a country, we are here. So we are okay to go for it. Turkey had its own challenges for attracting international capital.
You have a co-GP, right?
Yes, my business partner Anil, we formed Ida Capital together. We've been through this for the last 15 years. That's why it is the first time I'm defining him as co-GP.
It's a great name, by the way. The Ida Mountain near Ayvalık, beautiful part of the country.
Yes,
Great mythology.
I was a mountaineer, and I wanted to have a mountain name. And also, all the private equity and venture capital funds prefer to find names from ancient Greek, and we wanted a name from Anatolia. So Ida was the name.
And now, so this fund, it's fully deployed. You have other funds in a second fund in the works already?
Several funds at the same time, a different strategy. A Turkey small fund is up and running, coming, local domiciled. Also, we formed another fund to invest into one of our portfolio companies, a single asset fund as well. That's already up and running. Also, we're raising another, this time Central Asia focused venture capital fund with partnership with a Kazakh GP. So it's the first Kazakh-Turkish GP partnership. And
There's a lot happening in Kazakhstan and the region. Was it announcement of was it $1 billion
yeah, yeah.
fund of funds or something?
We've been looking at different markets for a long time, and then we are searching where our experience and our market and our even portfolio will be very competitive, very relevant. So Central Asia market is a natural go-to market for us, and then Kazakhstan is a growing market. There are a few other countries following that, Georgia, Azerbaijan, Uzbekistan as well. But I know and I believe that within 4 to 5 years, Kazakhstan would catch or surpass Turkey because
Wow.
infrastructure is good, the human capital is strong, it's an oil-rich country, and in terms of our venture capital activity, it's just starting, but it is resembling to Turkey a lot. So it's just following Turkey from 7 or 8 years behind. That's it. And that's the reason why we are there. We are also raising a new 100 million plus size fund, which will invest to Series A, Series B stage tech-enabled businesses, primarily in Turkey and in Turkish Nexus. That is the missing middle right now. A lot of VC activity at early stage, a few big private equity activity, but the Series A, B stages or growth stage investment area in the tech space is a big need or gap. So we're planning to fill that gap with our new big fund.
We hear that a lot, the kind of the Series A gap in Turkey. That there's a lot of small funds investing in seed, but a gap when you're looking for the Series A, Series B.
Yeah,
So
I mean, numbers do not tell a lie. It's a necessity, and there are a lot of nice businesses to make further investments, and we are very qualified to do those because we've been active in the market for more than a decade. We know the market, and even our own portfolio from the fund one is already a good
candidates
candidate. We have 4 home runners who are at Series A and B stages right now.
So we talked a little bit about some of the challenges of raising money locally, raising money from foreign investors to invest in Turkey. What's your view kind of overall about the Turkish venture and startup ecosystem as it stands today? What are the challenges and opportunities?
Looking at macro figures and numbers, Turkey is by far a developing tech and venture capital market globally, not also in the region. I mean, just Saudi Arabia surpassed Turkey just this year because of the billions being flowed by the government. Other than that, by its economy size, consumer base, tech history, and in the last 10 years traction, Turkey is a market which should not be neglected. And also, I see that as being Turkish GPs. We are not limiting ourselves with Turkey right now. I mean, I'm joining to this call from London. We're now repositioning the capital to UK to become more emerging market focused, primarily Turkey, but more emerging markets focused fund manager, because Turkey's next stage growth should be to explore new markets, both for startups and for GPs. And those next markets are relevant emerging markets in our understanding. I mean, Africa, Central Asia, maybe to some extent Eastern Europe. This is a different tech-enabled vertical story, perhaps you've been hearing.
Yeah, I heard of Central Asia some, a lot about Eastern Europe. There are a couple different BEC and E2VC, well-known examples that are, Turkish funds, but also targeting Eastern Europe. But Africa is the first time I'm hearing that. I mean, can you tell me a little bit more about what led you to Africa? What are the opportunities you see there?
Our last 3 years investments has been mostly focused on revenue-based financing in fintech vertical. And also as a founder, we have created a great company and we know the business fundamentals.
Just to be clear, when you say revenue-based financing, what do you mean by that?
Basically, so they're an agricultural trade company. They're an e-commerce trade company or they're a logistics company, but basically they tackle with the finance problem so that with their balance sheet power and understanding the markets, because these players are traders or are logistics companies or whatever the
So they
vertical is,
understand
they are the company of that vertical so that they can take their risks, exposure risk perception is different so that they can provide more financing at earlier stages and they can be fast and they can help the growth of the market and verticals. That is actually revenue-based financing so that they take some portion of the revenue from the company or from the business that they are working with. So it's not a loan. They don't get an interest and loan back. They share the revenues, profits, risk exposure is different. But there's a lot of growth opportunity in Turkey for that. And our businesses are growing so fast. So Africa, it is the kind of heaven of revenue-based financing potential because markets are small, the businesses are small, exits are hard, but it's a big continent, big economy, consumer base in each vertical, like again, like logistics, trade, e-commerce, agriculture, there needs a big finance gap, access to finance problem. So basically, whenever there's an access to finance problem in an economy, revenue-based financing is an option or is a potential, and we are the player of that.
Super. Wow. What is your sense of how do people see the Turkish ecosystem or some of these other markets we were talking about? I mean, do potential LPs get the message, or is there perception barriers you deal with?
Always. There has always been a perception barrier because of Turkey's geopolitical standing. I mean, you cannot apart a country and a country's economy and country's businesses from the place where the country is positioned itself. So, right or wrong, on the perception of international LPs, Turkey is a high-risk country. And actually, this was one of the turning points for us. It took for us years to convince the LPs that there's still a big opportunity. Turkey is a big economy. You should invest, etc. The ones who took that risk, so-called perceived risk, gained a lot.
We talk about the funds that were created in around that time frame, 2012, 2013. I mean, they all have amazing success stories.
I don't know of any fund run by fund managers locally in our local markets, except for a few, the sound and experienced and by the book, okay ones. I mean, Traction team, do your due diligence. Almost all fund managers performed nice returns or brought nice returns. That comes from the economy. There are a few which have created top percentile returns. That's another story. I know that we are among one of them. But on a macro level, would I be investing in Turkey? Yes, I would. Am I frustrated because of the relative lack of international investor appetite for Turkey? Actually, I'm not, because that gives me a lot of room and runway to catch the best businesses and then make nice returns. I'm so happy Uh, because if billions will be flowing into Turkish market, the competition will be harsh as well. I mean, we would create different scenarios, different methods in that way as for sure. But it's our flexible to transform ourselves into the reality and create solutions. And that is the factor differentiates GPs like us operating countries like in Turkey from the other developed market GPs.
You have a contrarian play you can go for. You can be right about something, but if everybody's right about it, it's hard to make a lot of money off of it. If you find something that nobody else believes in, as long as you're right about it, then you have a chance to make some money.
I mean, there's no single day that we see when testing kind of turmoil of different thing, and then we still manage to survive. So that's basically.
If there was one thing that you could change about the Turkish ecosystem or about people's view about the Turkish ecosystem, what would it be?
Turkish potential is not only for being local. The local market is big and it can create its own several $100 million worth of businesses and would create, again, very high returns to investors. Maybe a few unicorns, but we don't need that. I mean, instead of having 2 unicorns, having 30, $400 million worth of companies and do the IPO in the local market is a viable option. So Turkey itself is a big market and it can create its own exit story. That's number one. Secondly, Turkey has a strong technology potential so that the businesses can grow in mature markets like in US and to some extent in UK and perhaps in Europe, but US. That's another path. We also see the third option, which has not been explored yet, but a big option, to go to other countries like Turkey. So export your services, relaunch your services, because whatever the service you are providing, either logistics, e-commerce, education, agricultural finance, or agricultural support, whatever the service is, can be applicable or is applicable, I know that, is applicable in similar emerging markets. That's why we have a very high potential to be successful at the same time in different routes.
So what was the short answer of what would you change?
Other than saying change, this right now what we are doing is to implement a bigger fund for Series A and B. That is a big both opportunity and necessity. So we should fill one missing piece of the puzzle as well, because we have a very functioning, very vibrant capital markets, small but vibrant. We have a very burgeoning and also relatively grown early stage tech market. So we should fill the gap and then bring those tech businesses into our capital markets. That is what we have to be doing.
I saw you had a post about the currency risk, which is one of the issues. You know, you were talking about different paths to success for investing in startups. I mean, the global path isn't so much hit by that, right? If you're investing in a startup that's going to manage to flip up to the US and sell B2B software in the US, then the Turkish currency doesn't affect the outcome so much. But if you are addressing companies, and some VC firms don't look at that at all. I mean, I think you're right that there is a need for that. It is a big enough economy that there should be some set of startups that are just focusing on the Turkish market, and then they'll still have a path to target adjacent markets in the future. But if you are investing in those kind of companies, then the currency risk, certainly for the past 5-10 years, would have been an issue. And so then, you know, going forward as well, there's a risk perception for it. I mean, is there a solution to that, or is it just something you have to live with?
In that post, I propose government to take an action, because instead of providing grants and other things, that will be another option to pull in more capital into the country.
So the idea was for the government to provide a currency hedge, a currency
kind of, yeah,
for foreign investors investing in Turkish startups.
Yeah, kind of development finance focus. It would be mission or program specific. It would be covering several neglected areas, because otherwise all the money, all the capital goes into, let's say, startups, as you have given an example, who has a strategy to flip up to US and then create a B2B model and do an exit. So what's in it for Turkey in terms of tax revenues or supporting the economy? I'm not saying it's bad, but the businesses that grow in the country, they do their IPOs here, they create tax revenues for the government.
Well, and also part of what entrepreneurship does is provide solutions to problems that need to be solved. So if you're only addressing, if all the companies you invest in are only addressing US B2B software needs, then what's the contribution to society in a sense?
And also several government programs supports different GPs at LP level. Millions of dollars are putting into those GPs. I mean, we don't have a government investor yet. And I mean, as a government, I'm investing into a GP, and that GP solely invests to businesses that will flip up to US. So those are the development problems. Those are the program specific.
How did you come to that idea? Is it something you've seen anywhere else? Has any other country kind of done something like that?
Actually, as part of our Africa business development, I joined to a convening in Kenya, and then we had come together with more than 40 fund managers there for 2 or 4 days, and we discussed the challenges and opportunities in Africa. And I've seen that was another challenge of several African countries or GPs there. And an American GP proposed a solution, brought an idea. What if such a vehicle would be there? Then he said that a lot of US investors would be relatively easily investing to African opportunities. So why not do this similar thing in Turkey? I mean, the basic idea behind that, I don't want government to intervene into economy. But if they are subsidizing, in a way, our markets, there will be other methods to be a catalyst in the market.
Even according to the most laissez-faire kind of economic theory, it's still viewed as a good role for government to help solve obstacles for healthy markets to develop. So if that helps the venture capital market function, then that makes sense.
I mean, we will also see whether or how the Saudi Arabia markets will develop, good or bad. I mean, because of billions of dollars poured into the market, the VC activity has surpassed Turkey. But how the businesses will grow 4 or 5 years later, I doubt that. We'll see.
Do you have any insight into, most of the investments happening there with that money?
We're not touching the GCC market because of high competition, high valuations, small markets. Yeah, rich market, but small market. Take e-commerce. We're looking at the number of consumers, and we see that the markets are relatively small. So as a founder, let's assume you received $50 or $100 million of equity investment and it stays in your bank account and your market is small. What are you going to do? You will try to be a global company, but being a global company is not easy because, let's say, you plan to go to US. I mean, US is also a competitive market. There are several or perhaps hundreds businesses that will be similar to you. That's why, I find it not easy. And also, a lot of money is not good for founders, at least in our investment approach. We advise founders to take only the money that they need. Just with this method, they can protect themselves to over dilution or high dilution, and they can own their own business. The value is on those shares.
Speaking of what you're seeing, talking with founders, what is the kind of the biggest challenge you think Turkish startups have, and what's kind of the most frequent kind of mistake you see Turkish founders making?
There are a lot of opportunities for early stage financing. So a strong and nice business can find early stage financing up to a few $1 million. Up to $1 million is easy. Up to 2, 3 will be okay. But beyond that, they will hit the wall. That is the biggest obstacle for them, and they have to find a way to unlock that problem. We have helped our companies, and also we have done it in our own startup as well. We found other ways to unlock that capital. There are non-dilutive financing methods. If you can manage that, there's venture debt. In our work company, I'm also founder. In the last 3 months, we arranged more than $45 million of financing into the company through a non-dilutive financing strategy, not given one single shares to anyone, and we won't because the business is strong. And this might be contradicting as being a VC as well, because our objective is to take stakes from the companies that we're investing. So investing at a lower valuation earlier and taking higher stakes or shares from the companies to our own benefit. But rather than doing this, we openly share with our founders and target businesses that their objective is contradicting with ours. So their objective is to maximize their shares. So we have to be finding in-between methods. So after Series A and Series B, a next stage financing problem is the biggest obstacle. The second obstacle is the cap table problem. Giving too much shares at the early stages.
Now you're kind of back and forth between London and Istanbul, maybe, and Kazakhstan as well. Do you see benefits to being in London? Does it give you kind of a more global view, global connections, connections to foreign LPs? I mean, what's your approach there?
Numbers do not lie. Numbers do not lie. The UK and London is a big VC hub following US and biggest in Europe as well. So we should be here if we want to be a regional or multi-country investing GP. That's basically is the reason. And for sure, the connections, the financial system, outreach to other countries is relatively easier, but we're not abandoning Istanbul. So logistically, time zone wise, and our core team is still there.
Just a couple of questions to wrap up. There's the saying, strong convictions loosely held. You know, the idea that one of the aspects of being a good venture investor is being able to change your mind about things as things evolve. Is there some conviction you've had that recently you can think of that you changed your mind about?
It's our daily life, actually. But what I can say in terms of what recently, personally, I mean, in my mind, I changed that I do not like SaaS businesses anymore.
Interesting.
Because of AI, the typical SaaS service businesses would need to either converge into something or those services will be obsolete. A new era of tech services is coming, so that we are happy that we did not heavily invest into SaaS business.
Yeah, the Microsoft CEO had a interview where he was saying that kind of AI kind of kills the typical SaaS model. Last question, where do you see the Turkish ecosystem in 5 years, and where do you see yourself and IDA Capital in the next in 5 years? What should we expect?
Given the natural growth of the market, I guess Turkish venture capital ecosystem will grow more than $2.5 billion size in terms of investments in the next 4 to 5 years.
2024 finished with about $1 billion in investment in Turkish startups, and so you see it going to 2.5.
Exactly. That's why I'm foreseeing such a positive outlook, and I have to be positive. Because this number has been reached solely with local capital, or mostly with local capital. So in addition, combining the international capital and then the outreach to the other markets, there's a potential to grow like this. So that's the market size. And in terms of exits, number of exits will increase for sure. In terms of unicorns, I mean, I'm sure that at least one or potentially 2+ unicorns will come solely from our own portfolio. And there will be a few more unicorns in the market, but the biggest potential is near unicorn sizes. Our capital markets and our IPO path is staying virgin and fertile there, and we have the means and capacity to mobilize that. So our plan is and I see other players trying to do that as well. In the next 3 to 5 years, we'll see a lot of tech-enabled businesses going through the local IPO market and doing
And you think the
several
local
$100
IPO
million
markets
of exits.
can sustain $300-400 million valuation exits?
That's our market size. I mean, our capital markets are not big. I mean, in the last 2 or 3 years, the average IPO sizes were around $180 million, if I'm not wrong.
Valuation wise?
Yeah, valuation wise. And none of them were tech, by the way. So there's a huge opportunity in that. So that's why we're raising our next fund to be a Series A, B, going through IPO stage investment funds.
Very exciting.
We'll be able to create that market.
Awesome. Thanks for joining today. That was a really interesting conversation. Great story, background, and what you're working on, what you've accomplished, and where you're going. I really found it interesting. Very well thought out answers. So I really appreciate that. And maybe in sometime in the future, a couple of years, it'd be great to have you back on the show. Maybe in person when you're in Istanbul sometime.
Yeah, my pleasure. Thank you, Yunus, for giving this opportunity.
Great, super. Thank you for listening to this episode of the Turkish VC podcast. My name is Yunus Çelebiler. If you enjoyed this episode, please like and subscribe and tell your friends. You can listen to more episodes wherever you find podcasts, on Spotify or YouTube, etc. If you have any suggestions for people you'd like me to interview, or if you're looking to connect with the Turkish VC ecosystem, feel free to reach out. You can find me on LinkedIn. Stay tuned for further episodes.